Let's get rolling here. AMD, what are my thoughts right off the bat? Let's just talk AMD, okay? Listen. AMD is a huge buy. This is so silly. This is ridiculous. This is preposterous. The fact that AMD is selling off today, laughable. Laughable. So, what happened here is Meta, right? Meta supposedly might spend a few $1 billion with Google for some of their chips for certain workloads, okay, in 2027. Now, everybody's freaking out. Oh my gosh, does this mean they're not going to buy AMD chips? They're not going to buy NVIDIA chips? Did you just wake up yesterday? This shows me how little people understand about this industry, the chip cycles, or anything like that, okay? You have custom chips that are good for certain situations, okay? For certain workloads. This is a huge industry. Ask Broadcom. Broadcom's one of the biggest companies in the world, and they can help companies make custom chips that are great for certain workloads. This is a huge industry, a huge, area of the chip space, okay? Then you have companies like NVIDIA, companies like AMD that make the top of the line chips that are for the most intense workloads that you're getting the best you can possibly get in the world at that particular time, right? In certain companies, businesses, they like to use those best of the best chips for their specific workloads, okay? So the fact that my company, Meta, is going to potentially spend some money with another one of my companies, Google, is great news. What does it mean for AMD? Absolutely nothing. So what does it mean for another one of my companies, AMD? Nothing. Absolutely nothing. Let's say Meta spends, let's just throw it out there. Let's say they spend $4 billion on chips with Google in 2027, okay? Based upon how Meta's CapEx is increasing, I wouldn't be surprised if Meta spends $100 billion plus on CapEx in 2027. So let's say they buy $4 billion of chips from Google, okay? But still leaves them $90 billion plus of CapEx to be spending with companies like NVIDIA, companies like AMD. So the fact that people are like, oh, means doom and gloom for AMD is just ridiculous. It's just people don't understand like the industry. I even saw, this is so silly. This is so silly. I even saw today, might be the most silliest part. TSMC, I believe, was down big today. And I'm like, TSMC? Like, do they realize all these chips get made at TSMC? Like, this has no ramifications negative for them. Like, this is crazy. Absolutely crazy. So let me show you my projections for AMD stock over the next few years here and show you why the stock is such a buy today, okay? And then we'll talk about other stocks before we start reacting to videos, okay? So, you ready to see these projections? Here they are. These projections are run on 1000xstocks.com. This is the software we're going to have the massive deal on. This is software I use on a daily basis, okay? So one of the things we have is we have intermediate projections and we have advanced projections, okay? Advanced goes really in depth when you're really looking to get crazy with it, okay? So my AMD bull case, here it is. My AMD bull case has been doing 40% revenue growth per year on average 2026 2029. Lisa Su's talked about over the next 3 to 5 years, averaging 35% growth. Lisa Su tends to sandbag, so my bull case basically has things being a little better than what Lisa Su's saying they're going to be, okay? And then do net income growth at 50%. They should get a nice margin uplift as their revenue continues to grow, right? And also keep in mind they're selling a lot of high-end chips now, and will be certainly with the 450 series that starts to go into production in the back half of 2026. So they should get a nice margin uplift, but still, I don't have their net income margins going that crazy in this scenario. I have the net income margins only going to 19%. That's not a super high number at all. NVIDIA has been putting up net margins like, closer to that 50% level. So there's, we're not even remotely close to NVIDIA levels in regards to margins. So keep in mind, this number, 19%, could end up being really low. They might be able to push those net income margins to 25 or 30%, which completely would change this bull case into even much more of a bull case, okay? Now, if they're growing at those sorts of growth rates, 55 to 75 PE is very fair for a company with those sorts of growth rates. You can say it's even undervalued significantly. And this puts a stock, right around $1,000 stock come 2029. Right now, it's trading for less than $200 a share. Base case for AMD. This is Just a fancy way of saying this is what I expect to happen with maybe a little conservatism in it, okay? So basically I have them doing what Lisa Sue's talked about doing, about 35% revenue growth per year over the next 4 years, okay? Net income growth of 45%. Once again, net income margin's only getting to 19%. So I think the thing I'm most conservative with is the net income margins. Because I actually believe there's a good possibility they'll push into that 25% net income margins by 2029. But I want to be more conservative, so I have them only going to 19%. Now, if you've got a company growing 35 to 45%, top line, bottom line, I mean, honestly, you could command a P easily in the 50s, if not the 70s to 90s. But I like to be a little conservative, so I wanted to price them lower because people might think like the chip cycle's over come 2029, all those sorts of things. So I have them only at a 40 to 50 PE, right? Which is really low considering if they're putting up those sorts of growth rates year after year. And that puts a stock somewhere between, you can call it low 500s to high $600 a share. And right now it's less than $200 a share. It's an incredible return profile over the next number of years. We're talking compound annual growth rate in the 30s, ladies and gentlemen, okay? My base case, this would be if things went really bad for AMD, only 20% revenue growth, which isn't even close to what Lisa Sue's talking about the company will be doing over the coming years. Net income growth of only 25%, net income margins, embarrassing 17% number come 2029, 25 to 30p, no one wants to pay for it. And basically, I don't make any money, I don't lose any money on the stock over the next 4 years. I think there's a very low probability this happens. I would call this bear case way less than 10%. I'd call it less than a 5% probability that bear case plays out. But it always is a possibility, right? And basically, AMD would just be a money suck for the next several years, and I wouldn't make any money on the stock, right? My base case, I think something like this is, I would put this at probably about a 70 to 75% probability. They'll come in somewhere in here, and basically you'll see the stock, 3 or 4 years from now at price anywhere between $500 and $700. I think that's a very high probability. And the bull case, I think there's a much higher probability this plays out than the bear case plays out. We can call that about a 20% probability or somewhere in there roughly in regards to this bull case scenario, right? Because this bull case only has him doing a little better than what Lisa Sue's talking about. She usually sandbags. And net income margin's not even getting to 20%. What happens if those net income margins get to 25%, let's say, for instance? We would have to do, I think, net income growth of 65% here, all right? So now we get to net income margins of 28%. So we're a little high. Let's tame it down a bit. We'll take it to 60% net income growth per year for the company here. There's a beautiful thing about 1000X. You can run all these numbers and projections in a matter of seconds. So in this scenario, there we go. We're at a 25% net income margins, which isn't crazy to assume they could get to 25% net income margins come 2029. And then we're talking about this stock somewhere priced between $1,100 and $1,500 a share. And right now it's less than $200 a share. AMD's a buy. Now, what about me personally before we start talking about other stocks? Am I buying AMD today? I really want to. I want to so bad. I haven't yet. Here's why. I have over 7 figures invested into AMD stock. I'm sitting on massive gains on this stock, right? The massive gains part, I don't really care about. I don't mind. I've matured as an investor. I don't mind buying a stock I'm up huge on, right? Which I'm up multi 6 figures on AMD position, right? But I have over 7 figures invested into it. And although it's a screaming buy today, the thing is, what if I'm wrong? That's something you always have. It doesn't matter how much experience you have in the market. It doesn't matter how much success you have. It doesn't matter how many millions of dollars you made in the market. You still got to factor in what if I'm wrong, right? And for me to put more money in it when I already have 7 figures plus invested into it is a tough decision. So it's brutal. I'm looking at it today and I'm like, oh my gosh, this is such a screaming buy. It's under $200 a share. This is silly. This is nonsense. But the other side is me is like, I have so much invested in the stock already. I put even more money invested into it. What if I'm wrong? What if they don't grow the way Lisa Sue's talking about, the way I think they're going to grow? What does that mean? What if there's a massive recession? What if this happens? What if that happens? Running through all these scenarios, right? And so the moral of the story is, all this is a great buying opportunity for people that are underinvested into AMD or haven't invested yet. That's the way I would look at it. Man, I want to buy it so bad. I want to buy more shares, right? Because I wouldn't be surprised if 6 months from now, I wouldn't be surprised if AMD's, $300 plus, if not 350. You know what I mean? Like, and these things change on a whim like that. Like everybody's bearish on it at this particular moment, and next thing you know, everybody goes bullish on it. And so we'll see. We'll see. I mean, Meta, I'm looking at Meta. I think Meta's $1,000 stock next year. I think Meta's $1,000 stock in 2026. I understand all the depreciation. That's kind of something that's going to weigh on it. But Meta's revenue growth, at the end of the day, people are going to come flood into Meta. If they keep putting up these sorts of revenue growth, the latest quarter, they grew revenue 26%. If Meta keeps putting up these sorts of, 25% plus revenue numbers, there's no way. There's no way people are going to be able to stay away from Meta stock. And when I say people, I'm talking the Wall Streeters. They're going to have to flood into this baby. They're going to have to. There's no way they're going to be able to avoid that. Let's go ahead and take a look at some other stocks out there here today. So this is my current stocks and positions. Revolve's my best stock here today. Russell's really pushing up. Now, here's the thing with the Russell, okay? Look at Cake. Cake's coming back strong. Here's the thing, okay? I got to warn everybody here. Listen. Right now, we're in Thanksgiving week, okay? A lot of Wall Streeters kind of take off this week. So what drives a lot of the market during this particular week can be retail investors, average Joes, you and me, okay? And additionally, the other thing that can drive it is not individuals, it's algorithms, okay? So that's like the news today is so stupid in regards to AMD, the fact that stock sold off huge, but it's not like humans all selling out of it. It's a lot of it's just, Wall Streeters basically have these programs that so much of the trading's now done by machines, essentially, okay? And if a stock has a certain amount of bad news or a piece of bad news, it will automatically sell the position. If the stock goes to this sort of level or this sort of technical gets hit, boom, stock sold immediately. That selling leads to more selling. That's how you get a silly sell-off in a stock like AMD today. That makes no sense at all, right? And don't be surprised if AMD stock gets bought right back up next week when the Wall Streeters return. Okay, just keep that in mind. And so, the Russell moving up huge right now and a lot of these stocks running, I think a lot of that has to do with retail driving the market right now and the algos also sensing that and the small cap stocks move up, right? And so that's my 2 cents in regards to that matter, right? And that's why you're seeing stocks like Revolve, stocks like Celsius, stocks like Cake move up pretty significantly. Meta's a great bounce here today, 3+%. Meta's been an extreme sell-off. It's ridiculous. That stock should be $1,000 plus next year. Bottom line in regards to that. CRM bouncing nice. As far as stocks that are down, EL down a bit, but that stock's ran a lot. That stock has ran a lot, man. Look at a 6 month on EL. It's up 37%. So, even AMD, I understand there's a big drop on AMD, but look at the 6 month chart on AMD. 78% or 74% gainer. That's run a long dang way. Now, on the flip side, something like Meta has been dead for the last 6 months. No gains in Meta for the last 6 months. That will change. That will change. Wynn Resorts has been one of the most underrated stocks in the market, up 36% over the past 6 months. Very underrated stock. They are putting up great numbers regardless of the environment. They cater to the high-end consumer. The high-end consumer always has money. That's what I try to explain to individuals in regards to Wynn Resorts. Rich people always have money, right? Doesn't matter. Like, you got a $75 million net worth and the market goes down a bunch and your net worth goes down to $50 million. Guess what? You still have $50 million, and that's plenty to go spend 6 figures, 7 figures at the Wynn on a fun weekend, right? And so, Wynn's it's just a beautiful business model. And there's starting to be more and more excitement building. You got to keep this in mind in regards to 26 for Wynn. There's going to be a lot of excitement coming for Wynn. Do you know why? Well, it's not in Dubai. It's outside of Dubai. But the property in the Middle East is expected to open in 27. So that's a huge untapped opportunity. It's the biggest opportunity we've likely seen in an international market since Marina Bay Sands opened for Las Vegas Sands in Singapore. And that was back that was 15 years ago now or something like that. It was a long, long time ago Marina Bay Sands opened. This is the biggest opportunity we've seen since then. There's nothing like this exists in the Middle East right now. In terms of a gaming resort that's super high end, nothing like this exists. It's going to be the place to be in the Middle East. And people think, people aren't going to gamble in the Middle East. Come on. Did you wake up yesterday? You think because of religious beliefs, people aren't going to go gambling? Do you know the type of stuff that goes on in the Middle East? I don't think you guys know what goes on in the Middle East, okay? Like, that's got to be one of the silliest things. Like, do you know how many rich people are filthy rich in the Middle East are going to be going to the Wynn to have some activities? Let's just call it that. Oh, boy. So, there's going to be a lot of excitement that builds in 26 in regards to that. And I wouldn't be surprised if the stock was moved up considerably as you get closer and closer to that opportunity opening, right? And then I've seen this before, even when they opened Wynn Palace, the stock was running heavy before and then actually sold off after the property opened. So, you know, if that happens, that happens. Like, we'll see what transpires there. But Asia also looks good. So Wynn continues to be a great performer. Let's pull up my possible buys watch list here. Okay, look at this. So, some of this, I don't like the activity. Bath & Body Works running big. I don't like that. I hope that sells off again before year end. RH, I don't like that. I hope that sells off again before year end. Celsius Cake, same exact thing. I don't actually like those stocks running right now because I'm not planning on selling Celsius or Cake anytime soon. Like, I could hold those stocks for years. So if anything, I want them lower right now. I actually don't like those stocks running right now. Whirlpool, I would like to see that one down more, right? Kava. Yeah, that one, I really want to see that one go down to about that $40 level or maybe even break 40 and go into the 30s. If that happens, I'll definitely step in and start buying Kava stock. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Time to buy the dip.
Looking for the opportunities amid all this bubble talk and, but the roller coaster that is the market right now.
Well, great to be on the show with you today, Contessa, especially on really where the Fed has been so kind to us, you know. Great to hear from the New York Fed, from the Boston Fed today and see the market rally the way it is. We think, you know, where we stand right now, it really is opportunity, not so much to buy the dips wildly, but rather to focus on the babies that get thrown out with the bathwater, those really great stocks that for the moment get thrown down like hot potatoes onto the floor by the traders, the short-term aggressive investors, on any excuse to sell without FOMO in a bull market that continues to appear to be very much intact. So we continue to like infotech, communication services, we like industrials, we like financials, and yes, we do like
This is crazy to me, man. This is crazy to me. This is Oppenheimer's chief investment strategist. And look at this shirt he's in, man. Like, come on. And look at this background. Like, what are we talking about? The horrible lighting, and he's got a filing cabinet behind himself. Like, this is Oppenheimer's chief investment. Like, you would think they'd be like, let's get you like a professional setup and make sure you're wearing a suit or something like that. Like, heck, I even almost always wear suit jackets for my videos nowadays. Like, I'm wearing a hoodie today because it's raining out. And I'm sick of all this rain in Vegas trying to change the vibe. But come on, man. Like, this is Oppenheimer's chief investment strategist.
Discretionary. We have been, for a long time, we're recommend cyclicals over defensives. That's worked out now for years, as well as for this year itself. We think volatility, part of the story. The big issue is, will the Fed indeed cut in December? We think it does 25 basis points. We call it another down payment by Jerome Powell to let both Wall Street and Main Street know that indeed the Fed is in the process of ending the Fed funds hike cycle that started in March of 2022. So far, what do we have? We have 3 cuts from last year, 2 cuts so far done this year, with 1 more likely to go. We can't help but think that this will, in effect, just lets people know that it may not be lowering rates as fast as many in the market want, particularly leverage players on Main Street, whether it's real estate or people just looking for lower mortgage rates. But we think overall the resilience in corporate earnings is as shown by the S&P 500, thus far remarkably good, powerful, with a domination of earnings growers versus I think just one or two negative earnings growers among the sectors, among the 11 sectors. And there to be expected with energy based on the fact that we're awash oil around the world. But the rest is very good, and so we think stocks have time to move up and heal from the wobble that it had over the course of the last 10 days.
You mentioned consumer discretionary. In all of the focus on whether the Fed is going to cut or not cut, what gets lost is how that affects how consumers see the economy. The University of Michigan just out with its consumer sentiment index, which basically was in line with expectations, and they saw a little bit of a pop, just itty-bitty post-government shutdown when that ended. If you like all these sectors, info tech, communication services, industrials, financials, and consumer discretionary, what's there left not to like?
Well, I think, for example, we're not hot on real estate at this point. We think that's more a granular story where you want to look at the individual properties. We would also think that related to materials, not quite yet. It's beginning to warm up and gain some favor. I think earlier today it was seeing some favor. But we do think some that have been in the shadows sort of for a while here. Utilities are looking good if the Fed is in the process of reducing interest rates. That trend should help reduce the typical what they call the bond market proxy of the utility stocks. When interest rates are high, their yields aren't as attractive typically, but this would be much more attractive for their yields. In addition to that, the interim to long-term story for utilities, especially the regulated utilities of the S&P 500, looks good with prospects for improvement of the grid in the U.S. to provide all that electricity we're going to need.
So is it time to buy the dip, right? Technically, it's always time to buy the dip. Like, I buy, the way I personally invest, here's how I do it, okay? I buy stocks every single Friday. Unless the market's closing on Friday, then I'll buy it on Thursday. I buy in the public account, which is available for everybody in the private stock group to see every move I ever made in there. I buy in the Patreon portfolio every Friday. I buy in two of my private portfolios also every single Friday. That's non-negotiable. I don't care if the stock market's high, low, medium, if it's up a lot, if it's down a lot. That's happening every week regardless. There's always great opportunities. I don't care if we're in a bull market, bear market, kangaroo market, there's always going to be opportunities out there, okay? Always buying. Other than that, if the market gets very elevated, I start cashing up. So I'll put more of my income towards savings or CD accounts, something like that, or treasuries, than to put it into the market at a particular time. So a good example of that was certainly, really from this summer into really October. From summer to October, I was definitely building cash levels, right? Building cash. I was even selling some stocks and building cash that way. Stocks like Palantir, obviously, right? That got very, very richly valued, and a few others. And so building cash that way as well, right? Then we have some drama. Usually after the market gets very elevated and I build big cash levels, what happens is usually the market starts going through some trauma. It could be a pullback, could be a correction, or it could be a full-blown crash, depending upon the circumstance, right? And then as that transpires, then I start to deploy that cash more heavily. And I start doing freak buys, I call them, where I'll come in with $40,000 in a day and buy. I'll come in with $60,000, $80,000 in a day and I'll buy, right? And so that's the way I play this game. I'm buying regardless every week. But if it's harder for me to find great deals and I'm not that enthusiastic, I'll build cash levels. And then as the market drops, I get more bullish and I deploy more money, and that's the way I play this game. And so it goes pretty well. And so that's it, man.